In this presentation, we will discuss payroll periods within QuickBooks Online. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in our practice test file to practice navigating through payroll. You can practice navigating through your own company file, or you can use the free QuickBooks file, which you can find by Google searching Test Drive Online. We're going to scroll down to the Workers tab. So we're going to take a look at the Workers tab, and then up top be in the Employees tab. So in our company file, we have 3 employees. As we look at this, we want to reiterate the periods that we will be discussing, because this is something that will change from company to company. Once it's set up, if we work in a particular company, we're just going to get used to whatever the payroll is. If we pay every week, then we're just going to know that. If we pay every other week, we're just going to know that. If we pay semi-monthly, we're going to obviously know that, and monthly, we'll know that. However, if you work in an area where we have different payroll processes or switch companies, it's something that we really want to be aware of. The basic payroll in and of itself, the rules are going to be much the same. However, of course, there will be a difference within the cycle as we have different payroll periods. The payroll periods will generally be set up as we add new employees. So as we add a new employee, for example, if we go through and we were to edit the employee, I'm just selecting an employee and going through the edit screen, we will then have the how often do you pay the employee here. Now, if we select this drop down, we've got monthly, and we have other options normally when we add the new employee, which will include weekly, twice a month, semi-monthly, or bi-weekly, and so on. We here, of course, will be going with one payroll option typically for most of our employees, as most companies do. Most companies will pay all of their employees in the same fashion. We're not going to say that we're going to pay one employee monthly and another employee weekly. However, that might happen. There are circumstances where that could happen. So note that we are setting this up in terms of an employee by employee basis. Most employers will have the same setting for all employees for their basis, or at least the standard. That will be the norm. That will be the default setting. We here are going to use a monthly setting, and the reason for that is because we want to be able to jump through time and get through a full quarter's worth of data, or even more than a quarter's worth of data, so that we can then look at the quarterly reports, and we can look at the year-end reports and the W-2 and W-3. So going monthly allows us to cover more time so that we can look at those quarterly reports. As we do this, as we go through these examples, you want to just keep in mind and visualize, okay, what would this quarterly information, what would this monthly information, what would this yearly information look like if we just had run more payroll periods? And it would just mean that we would, for example, twice a month be running twice as many payrolls than we would if we just had one a month. What would that look like? And you can kind of visualize the data, and this will help us to be more flexible as we enter data, to help us to visualize what it might be like if we were in a different company setting or working on the payroll for a different company. I'm going to close this back out and just go through what it would look like if we were to process payroll. So I'm going to go back to our employee list up top. So I'm going to navigate back to the employee list and then just run the payroll, just to look at the payroll settings and look at how often it would be run and what the dates look like. So the typical dates, you'll see the periods up top. So ours are monthly here. So you'll see that QuickBooks actually is adding into the future, or projecting out into the future, these pay periods. So here are the pay periods. They're for the entire month. And then we set the pay date to be as of the end of the pay period. So the pay period is going to be a time frame, in our case a month, having a starting date and an ending date. And then we've got a pay date, which may be the ending date, but doesn't have to be, and oftentimes it wouldn't be. Oftentimes it's going to be a little bit later, because we want the cycle to end and then possibly have a pay period that will be sometime after that, so we have time to process the payroll. So that's going to be a typical type of setup. Just remember that the period's going to be different than the date here. The period's the time frame, starting and ending point. The pay date is the date that we write the paycheck. For more accounting information and accounting courses, visit our website at accountinginstruction.info.